So the Trump tariffs and the bond market are affecting the Los Angeles state real estate market? Let me tell you why. Scott Himelstein with the Scott Himelstein Group. So today we're going to delve into how the Trump tariffs and the bond market are interconnected and how that's affecting and how it could affect the Los Angeles real estate market. So first off, we should really start with what is a tariff? And a tariff is a taxation on goods that are imported into the United States to try to put everything on a level playing field, right? So it's very inexpensive to make and produce things in China or overseas. So think about fashion, right? All of those clothes, that stuff that's made in China at very, very low cost. So we can buy it at super cheap cost here in the United States. And then you have clothing companies, I don't know, like Old Navy or Abercrombie and Fitch, and they're actually more expensive because we can't have sweatshop-like conditions here in the United States. So we have to pay higher wages. So the cost of those goods is higher. So it messes up competition. So extra taxes on those imported goods try to create more of a level playing field between imported goods and what is actually produced in the United States. So what the administration is trying to do is implement sweeping tariffs across everything that is shipped into the United States, thinking that those countries, those people are actually going to pay those taxes, when in reality, really, it's actually a taxation on the American consumer. So if you buy goods that are made in a foreign country, you are going to be paying a higher price for those goods if tariffs are actually put into place. So why am I, as a real estate agent, talking about tariffs? Well, because they can have a huge impact on the housing market and the cost to build homes. You see, the United States gets a lot of its lumber from Canada. So if we're importing Canadian lumber right into the United States and we put a tariff on that, well, guess what? That lumber now becomes more expensive. And who do you think is going to pay for that cost? Well, it's not going to be the lumber companies, right? And it's not going to be the builder, right? They're going to pass that higher burden onto you as the consumer who's purchasing new homes. So it's not just new construction, because a lot of things that go into building housing, such as appliances, carpeting, all kinds of materials, are really typically made elsewhere, and then they're brought into the United States. So all of those things could have taxes placed on them, which would make the end product, the home itself, that much more expensive for the American consumer. So right now, I think that Donald Trump is the type that kind of really shoots from the hip and just does things in the moment. So these tariffs are really on again, off again, on again, off again, right? There's a lot of volatility in the market, and companies, the public, and other countries really don't know the rules of what's going to happen because there's no defined set or plan what's taking place right now. And in the beginning, Trump had said he was going to put tariffs on everything. And now that really may not be the case, and the markets look at that kind of more favorably. But there's also a lot of uncertainty baked into the market around what's going to happen, because the market doesn't really know what's going to take place. And the market, if it doesn't like one thing, it does not like uncertainty. So as of now, the housing market hasn't been super affected yet. But if those tariffs are put into place, the cost of the housing really could increase, and especially on the new construction or for remodeling, because you have to buy materials, replace appliances, those type of things. So if you're considering purchasing, especially new construction, now might be the time to do that, to get ahead of those imposed tariffs, causing those homes to be more expensive. And when it comes to tariffs, right, maybe you're looking at China, and you're looking at, a lot of times now it's more than 200% they want on the tariff. So maybe a simple thing such as an air fryer, right, that was maybe $150, right, that's going to be so much more. That's going to be over almost $300 now. That's crazy, right, just for an air fryer. And you're going to see that across the board if these continue to be enacted, right? So we're going to have to wait and see what happens with that. The problem with real estate prices is that they're sticky. Once prices go up, once neighbors see that another neighbor sold at a certain price, once a builder sells homes at a certain price,
they're not motivated to lower that price because they'd be hurting themselves. And neighbors see a home sell on their street and think, oh, my house is better, so they want to sell for even more.
Well, builders, they're really focused on protecting their profit margins, and they don't want the public to know what the homes actually sold for, which is why so much in concessions and bonuses and incentives are usually offered, especially if you use their preferred lender. So they're paying you tons of closing costs, but none of that gets reported on the tax records. So they won't have to lower the price, but they'll kind of offer incentives to you to get you to buy the home, and that's how they get you in the door. That way they protect the sales price on record. But at the end of the day, and I'm a huge proponent, and I've said this countless amount of times here on this channel, that you should buy a home when you feel financially ready to do it. Don't let somebody in my field or the lender field pressure you, buy now, buy now. You have to do it when you are ready and when it makes sense for you, and you're comfortable at the end of the day with the monthly payment. Personally, like right now, I think the tariffs are probably going to be a lot about nothing. I don't think we're going to see the Trump administration implement sweeping tariffs across the board. I think they're kind of being used as a tool to negotiate, threatening tariffs to bring people to the table for deals. I don't know if that's going to happen or not. I'd love to hear what you have to say about that in the comments below. But if they do happen, though, one thing that doesn't get talked about enough is that the tariffs really are enacted. The administration wants to reduce taxes. And so, yes, the cost of goods will definitely go up, but the amount you pay in taxes would go down. So they're trying to shift from taxing income to taxing consumer goods instead. I don't know if that's going to be a great idea. I could think of a million different reasons why it would not, but I have a feeling that's probably the mindset they're going with right now. And it's really going to be really interesting to see how this all plays out at the end of the day. Whether they can actually achieve what they're aiming for by using tariffs as leverage. I'm kind of a spectator like you, and a lot of this is theory, and it'll be interesting to see what actually takes place. And by the time you watch this video, who knows what's happened, right? We're such in a volatile and crazy time right now. But as a buyer, I wouldn't be overly concerned about the tariffs. I'd be more focused on doing something when it actually feels right. And we're kind of seeing that play out in the marketplace right now, that even with all the noise, a lot of homes are selling, especially under that sweet spot of 1.3 here in Los Angeles County, 1.3 million. That's where a majority, I'd say 75, 80% of the home buyers are right now. So if you have a home that you're buying or selling, like that's where a majority of the activity is taking place in this marketplace right here in Southern California. All right, so that's what you need to know about tariffs right now. But you see, I don't think the tariff is having the big effect right now like the bond market. So let's zoom out for a moment and look at the broader economic picture, because tariffs aren't the only factor putting pressure on housing affordability. Changes in the global investment behavior are having a real big impact too. So I've seen a pullback now by many foreign investors and a reluctance even from US investors to put money in the bond market. And the bond market at the end of the day is really what essentially controls the world's economy. And that means that demand for US securities is reduced. And when the demand drops, the bond prices go down. And when the bond prices fall, the yield goes up. And guess what the mortgage rates are tied to? That 10-year Treasury note yield. So we've seen an increase in yield. So foreign investors have pulled their money out and they're moving into other assets, right? And to do that, they have to sell US dollars. And in order to buy those other assets with the proceeds of their former investments in US bonds, the result, the US dollar has gone down as well, right? So we have some friends recently that really decided they're going to go to Japan at the end of the year. And guess what? When they were looking at the exchange rate, it was about 1.55 in the middle of February, the yen to the dollar, right? So now it's already down under 1.4. So that's easily a difference of about 10 to 15% in what it's going to cost them on that trip alone. So you can see how the US dollar has fallen so much just in that so little bit of time, right? And so the combination of rising yields and a falling dollar is very unusual, because normally when US yields, right, the yields rise, well, guess what? Our investments become more attractive to foreign investors. They typically buy more US assets, which means buying more dollars, and the dollar strengthens. But when you see the bond yields rising and the dollar falling at the same time, that suggests that investors are pulling out of the US market, and that does seem to be what's actually happening right now. And the most visible impact of this trend is on the housing market, because we did see yields come down pretty rapidly about 2 weeks ago, which brought mortgage rates down a bit as well, into the low sixes. And that uptick in affordability caused housing demand to pick up slightly. And we kind of tracked this week by week. And these things were really showing a lot of signs of improvement through about the last 10 to 12 days. However, with the yields on US securities right now, especially the 10-year Treasury, climbing and climbing on a daily basis, mortgage rates are also rising. And that means housing affordability is getting squeezed even more once again. So it's becoming harder for people to qualify and afford mortgages at the same time. So what does this mean for you as a home buyer and seller? Despite all of the noise that we're seeing right now, we are seeing a lot of activity right now on our listings and in the marketplace in general. But the issue that we're seeing right now is that a lot of the buyers right now probably got their pre-approval letter, maybe 2, 3, 4 weeks ago, and they're kind of surprised that the rates have gone up so much over the course of the last 2 weeks and on a daily basis. So if you're a buyer right now, it's really critical that you go out there and talk to your lender and get the latest rates right now, so that way you're kind of up to date of what's taking place right now in the marketplace. And then if you're a seller too, I think you have to be sensitive too, because if someone's going to be closing escrow, in the next couple of weeks, and their interest rate's going to be 6.5%, right? But maybe now it's looking at 7.25%. Well, guess what? You know what? You have to be prepared for that as a seller, because you're probably not going to see the same amount of offers that you saw previously. I'd love to get your opinion on what you think will be the result of tariffs and the bond market when it comes to the Los Angeles real estate market. Where do you think we're headed? Love to hear from you. I'm Scott Himelstein with the Scott Himelstein Group, and thanks for watching this video.